Welcome to Commerce class. Today's topic is Indian capital market evolution and growth. India after independence, that is the period between 1947 and 73, they saw the development of infrastructure for capital market. Now, basically, India after independence was a agrarian country in nature. So they wanted to bring up a development in different sectors also. So they required finance for the public sectors. So the finance for the public sector was made possible through various different types of institutions. So during this period, that we saw the development of financial institutions like Industrial Financial Corporation of India, Industrial Credit and Investment Corporation of India, Industrial Development Bank of India, Unit Trust of India, State Finance Corporation, and so on. Now, all these financial institutions, what they did was they strengthened the capital market. So between the period 47 and 73, a number of financial institutions came up. Then the period between 1980s and 1992, this found, that is, the investors found debenture to be a very powerful instrument. So through debentures, they were able to mobilize a lot of fund in the primary market. Now, why this debenture? Because they found safety investment in debenture rather than shares. Now, debenture holder position is that of a creditor, where he gets a continuous and permanent fixed returns in the form of interest. So this debenture turned out to be a very powerful instrument. Next, we saw the public sector bonds were introduced. So after the public sector bonds were introduced, a lot of stock exchange came up. How does a stock exchange come into existence? It is the thought of the members as well as the investors who joined together and formed this stock exchange. So a number of stock exchange came up in different places. This marked the growth of secondary market. Always stock exchange refers to a secondary market. Okay. So what happened as a result? Public started to invest through stock exchange, but there were a lot of scam and fraudulent activities which took place in the stock exchange. So the government thought they need to have a regulatory body to regulate all the activities taking place in the stock exchange. That is why SEBI came into existence, Security Exchange Board of India. Now this SEBI laid the guidelines for almost all the activities for the companies. The main reason was to protect the interest of the investors. Okay, so after that they saw the credit rating was introduced for financial services. So a number of credit lists were given, and if the public were satisfied with the credit rating offered by the SEBI, they can invest in those particular field. But even after such credit facilities were in rating for credit, rating of that financial institution was done, they were not at all satisfied. So they wanted to revamp and restructure the secondary market. Okay, so many committees came into existence, and the activities of many committees varied from one to another. Committee on Organization and Management of Stock Exchange, then a working group on the development of capital market. They saw to that. Then a study group for guiding relating to valuation. Valuation means regarding the maybe securities or regarding the financial institutions and new instruments. Then a high powered study group on establishing of new stock exchange. If you want to establish a stock exchange, what are the mandatory you have to follow was laid down by this high powered study group. Then a committee on trading in public sector bonds and units of mutual funds. So all these committees were a proof that they felt that there were a lot of scams or fraudulent activities, or maybe they need to look far ahead. So these committees laid down various rules and regulations to be followed by the investors, corporate sectors, and those dealing in the financial market. So this is it, the evolution and growth of capital market. Okay, a quick recall, 1947 to 73, number of financial institutions came up and they're giving you a list of it. And then you saw the between 1980s and 92, debentures came in because of safety of investment in it. Then you have the stock exchange coming up, and this marked the growth of secondary market, but there were a lot of scams taking place. So SEBI came in to safeguard the interest of the small investors, and even then they were not satisfied, so a number of committee came into existence. So uh, this is the growth, evolution and growth of capital market. Thank you, children.